So let's just have a look at that in terms of that rainfall reliability in May, recalling before that we saw that it was more reliable in May than in April, based on the current record with the green bars. And with the projected future, the possible climates in 2050, there's a couple of features here. One is that, yes, indeed, there will be a difference to April in terms of the rainfall reliability, and that there's variability in the model outputs, but also there seems to be a trend in declining variability. And this has consequences for how agriculture can manage future risks and adapt to things like climate change, because there is quite a bit of uncertainty and variability that's projected. And risk management offers an effective approach for Australia's agricultural industry to respond and adapt to climate change and variability. It doesn't necessarily eliminate risk, but it achieves a balance between risk and return. All risk management options have a cost, either directly through purchase of risk protection, such as insurance and hedging, or indirectly through relinquishing some potential gains by reducing stocking rates and crop inputs. Now, producers are likely to apply different risk management strategies to the same situation, depending on their appetite for risk. And although climate risk management in agriculture is ultimately the responsibility of producers and agribusinesses, government policy will continue to have a large role in increasing the preparedness, responsibility and capacity of farmers to manage climate risks. The main risk faced by climate change is drought, and indeed policies will therefore continue to be required that treat extreme climatic events such as droughts as an integral part of the agricultural environment and promote risk management as the most appropriate means to deal with such events. There's a wide range of risk management options available to Australian producers. The first set of options I'd like to talk about are decision support systems, or DSS. Agricultural DSS are computer-based tools designed by scientists to provide information and procedures for assisting management decisions. Despite the availability of climate-related DSS, adoption by producers has been slow and low in most instances, and many reasons have been proposed for this, including time constraints, tool complexity, little or no extension, marketing and support, and lack of relevance to local conditions. To date, farm advisors and consultants have tended to be the major users, who in turn advise producers. DSS have had and will continue to have a significant role in guiding the development and deployment of agricultural policy. Examples include the National Agricultural Monitoring System, the NAMS, and its successor, the Monitor. The Monitor delivers a range of production, biophysical and economic information that's been used, for example, in the assessment of drought exceptional circumstances. So what about adding climate change to DSS? At present, there are two main climate change-related DSS that can be used in Australian agriculture, AusClim and the Agricultural Production Systems Simulator, APSIM. However, both of these tools tend to be used for research and education purposes more so than supporting on-farm decisions. Greatest challenge facing climate change DSS in agriculture is the high level of uncertainty, as I displayed before, about future climate projections, which makes decision-making by producers and policymakers very challenging, but also offers opportunities for innovation. The second set of risk management options I want to discuss today is insurance and other financial products. Many risks faced by producers can be treated by taking direct action or precaution. However, not all risks faced by producers are insurable. Markets for insuring agricultural production from drought and other climate risks in Australia are uncommon. And apart from insurance for fire and hail damage, there are limited options. Multi-peril crop insurance is a form of insurance that allows producers to insure against percentage of crop yield production. These schemes are widespread in Canada, United States and India and are heavily subsidised by governments. It's not a viable option in Australia without significant government subsidies. Given the lack of traditional insurance products to protect against production risk under future climate variability and change, new and innovative ways of managing risk need to be developed and adopted. In recent years, there's been a few new types of financial products entering the market. Uptake of these products by farmers has been limited to date. Crop yield simulation insurance is based on simulated yields rather than actual yields. Some innovation is demonstrated by combining a DSS with insurance products. Payments are triggered by a simulation model and on-farm losses are validated by an appointed agronomist. Weather derivatives are a relatively new financial product offered to insure against climate changes, climate variables such as temperature or rainfall. They pay out on a predefined amount for every day over a defined period that the temperature or rainfall is above or below a specified level. The major problem is that weather and climate-related events tend to be localised, and it means that weather derivatives will not necessarily match local conditions or weather patterns on each individual farm. So in summary, Australian producers can plan for future climate that is projected to be hotter, with increasing variable and unreliable seasonal rainfall and more extreme climatic events. As a result, risk management will become an increasingly important process for producers to respond to risks. Drought is the main climate risk faced by Australian producers and is set to increase in the future. DSS and insurance and other products have played a relatively minor role so far, but show promise. DSS are expected to play a more significant role in supporting farm decisions in an uncertain, variable and changing climate, whereas insurance and other products may also be used widely by producers, but are only likely to cover a limited range of climate risks. Innovations, of course, are required, including combining options in novel ways. Thank you.